Understanding this one trading concept is what helped me generate my first $100,000 month, and that was this month. And I guarantee you by the end of this video, you will have learned how to spot high probable trades. ICT's power of three is divided into three phases: accumulation, manipulation, and distribution. And for anyone that's like watched my previous videos, this honestly, like it's I say this every time when I answer, like when I'm talking about my model, I say I always look for accumulation, I always look for a manipulation, and then I answer on distribution. Well, actually today we're gonna get into what really that means. So accumulation is pretty much market moves sideways to gather liquidity and trap traders on both sides. This phase builds fuel for the next move. Also, let me actually draw what accumulation is, okay? So let's say we have a high, okay, let's say we have high liquidity at this zone right here, right? What market is going to do when we have a lot of selling up here, obviously, like we have just straight selling. What market tends to do is we start battling between buyers and sellers. That's the way I like to think about it. Because once you start reaching a zone where there's gonna start being where there's gonna be buyers, you're gonna start seeing a fight, right? There's gonna start like being a fight. Once, like, think about it like this: if I'm in a war and I'm going to the opponent's side and I'm trying to like, and they're trying to beat me, then there's going to be a fight where they're trying to be more dominant. So coming to the zone, what's going to happen is buyers and sellers are going to start losing momentum, and buyers are going to start like holding, obviously dominating the market. And then once we come down to the zone where liquidity is at, then yeah, okay, well, let's actually get into that in a second. But pretty much what this is, the buyers sellers like analogy where they're fighting, that is accumulation, where market is accumulating, trapping traders on both sides, gathers liquidity right here for the buyers to start moving. And yeah, that is essentially what it is. So every trade I try to look for this because it is telling me that we aren't just straight selling anymore. Because if we're just straight selling, there's a high probability that market is just gonna keep going down, right? But accumulation is letting me know that I am like the market is really just about to, like, the other dominating side is about to start pushing the market towards the way that they want. So the next part is manipulation. What is a manipulation? Manipulation: price breaks out in one direction, often falls to grab liquidity, then reverses to the real direction. This is where the smart money enters. So if you guys really haven't got the gist of it, I don't know what to tell you. I kind of like spoiled it right here. But again, what we're looking for is accumulation. Then we were looking for manipulation towards the side that the sellers are out. And then once we grab liquidity, this is where a lot of stop orders are going to be at. This is where all sellers, like, think about it. If you took a short right here, you're going to want to take profits right here, right? You took profits, you sold your short, you're not selling anymore. You're looking to buy. That's pretty much the psychology behind this entire thing. You're looking to buy now. So essentially, after accumulation, we're losing momentum. We're going to come down, manipulate. We're going to fake out because you see what I'm saying? We're going to have a breakout. And this is where all support and resistance traders essentially fail. Because look, let's say we have like this accumulation, right? We're moving like this, right? Let me draw this. We're moving like this. And what? We have support and resistance traders that are waiting to enter off a breakout towards either side. What this is doing, this is exactly why you never want to trade support and resistance, because you will literally you will find a breakout, right? But then you will get manipulated. You will get manipulated because market's real move isn't down here. It's to go towards the other side. And this tends to only happen when you actually have like a big, like a zone, big chart. And this could also happen. This is like an example of one like model. Like this is my model external range liquidity. But for example, you can find accumulation when you're entering what a fair value gap zone. Same thing. Coming down, you might want to reject that. So it's essentially where any type of liquidity is. So this is essentially what manipulation is. You wait, you have accumulation, market comes down, manipulates into where liquidity is. You grab a whole bunch of liquidity right here. Of all the retail traders, they're stopping the order. Smart money is getting, like, a big corporation is getting ready to enter again. We might sweep the zone. We might just directly bounce off of it. But either way, we will start going up, and that is the second part, manipulation. So pretty much what market's like just manipulating you to think that's gonna keep going down towards here, but no, it's really not. All right, don't fall for that. So we've gone to the two zones. Let's mark these out separately. Accumulation. Let's do this one blue. Manipulation. And the last and final part that we're looking for is distribution. And okay, let me go back to my marker and change it back to green. Distribution. Profit taking. This is where you want to take your profit. This is where you want to enter the trade. Sorry. Anyway, after moving in the true direction, price slows down or reverses as smart money takes profits and exits positions. So, distribution, the final step. Yeah, so after moving in true direction, price slows down or reverses, and that is exactly what happens. Manipulates, right? We're looking for distribution now. What market does, goes up, back, all the way up here to where price was originally supposed to move in this zone. That is essentially, it's broken down into these three phases. Accumulation, right? We already went over it. Manipulation, and finally, distribution. Distribution is probably like all this. So yeah, that is pretty much accumulation, manipulation, and distribution, power of three, AMD, whatever you want to call it. AMD stands for, again, accumulation, manipulation, distribution. But let's actually look in the charts and how we could actually find entries like this. So I'm already on replay mode. I'm ready for you guys to like get straight to learning. Get ready to take notes. First thing you want to look for. We're in the 1 hour chart right now, but just ignore that. We have a swing high, right? And if you could already tell, like if you've been listening, you could already tell what I'm about to say. Accumulation right there. We could obviously see that the buyers are losing momentum in the zone already. Second part, manipulation. We have that above this where the swing high, where pretty much market is faking out all the support and resistance traders, all of them. Doesn't matter if it's in this zone, this accumulation, consolidation, doesn't matter. And the final step that we're looking for is distribution. But how do you find your ideal entry? Well, this is where my model external liquidity sequence comes into play. Let's actually get into that. So if anyone knows anything about my model, the first thing that I look for is what? Rejection / sweep of 1 hour external liquidity or the 15 minutes 1 hour imbalance. So we already have that. Rejection off of a 1 hour imbalance. The next step, we have accumulation manipulation. I didn't really write this down because this is pretty much the lesson. Second step is wait for market structure shift and displacement on the 5 minute. So now that we have our liquidity, we're going to go on the 5 minute, and what we're waiting for is a market structure shift with displacement, and we have that. And what displacement is pretty much a candle that caused an imbalance. Because what we don't want, let me actually have, like, I did a lesson on this, so it's probably here somewhere. Let me see. Okay, this is the difference between displacement with a market structure shift and bearish one. So right here, what do we have? An imbalance. It's causing an imbalance, right? Market's causing an imbalance right here. Well, no displacement, and also I don't know why this is so goddamn blurry. I found this on Google, honestly. No displacement. What do we have? Candle just closes, or wick just closes above. What does this tell us? This tells us that there is no, that liquidity isn't strong enough to even close above this market structure shift, which means that market's probably going to keep going down. So yeah, that's essentially what the difference between no displacement is. So again, you want to look for, okay, by the way, little quick flex right there. I didn't even mean to do that. It's just the path to March into April 12th. But anyway, guys, no, all right, it's not even funny. Anyway, market structure shift, you have displacement. What does it cause? It causes an imbalance right there. If you guys can tell, we have fair value gap. Boom. We have an imbalance. That means a strong candle. We already know that. Second that we're looking for is some sort of sorry, what is it? 9 to 21 EMA switch. So that's the next step in the thing. So wait for market structure shift, and then 9 to 21 EMA switch. Ha, keep flexing that. It just slips. Damn. Anyway, 9 to 21 EMA switch. 9 to 21 EMA switch. You guys can literally just copy my EMA settings right here. Boom. If the 9 and 21 of the blue goes above the yellow, in this case the blue is 21. If it goes above the yellow, then guess what? That means that means market switching trend. For example, right here we have yellow above blue. What are we in an uptrend? Now we're in a downtrend. Simple, very simple. Third step, enter on inverse fair value gap. So we're looking for anyway, what we're looking for is a inverse for the fair value gap, right? We're looking for market to inverse on a fair value gap. So it doesn't matter where you're, okay, this is actually perfect right here. We have one right there. We inverse right here. So essentially you could have realistically took your entry all the way up here, or you could have been more safe and waited for this market structure shift, right? You want to be more safe, and we have another fair value gap or inverse fair value gap right here. And now when we go back to the 1 hour, let's go back real quick. We can actually set our entry. And let's say we wanted our entry, doesn't matter. You could be like right here and then aim for down here, just like how this candle dropped, and this could be your stop loss. Or you could go for the big boy plays and really short the position and just go all the way down to the next external range liquidity. You could go right here, you take profit one right here. So profit one right here, you could take half your profits. Profit two down here. Now that's actually how this trade plays out, right? Play it, boom. We're gonna see. Market comes down, boom, boom, boom. Profit one taken, profit two taken, and that's it. And as you can see, market starts, it might go even lower. Where to where? Oh, you could even take profits down here. I didn't even see profit three. And it is as simple as that. And always you want to be targeting next external range liquidity or internal range liquidity. So your profit one could actually be inside here. And there's really not any other ones, any internal range. But yeah, so that's why you want to have multiple profits as well. You could be taking 60% of your first profit, second profit, you're going to take 100. Doesn't matter. That's how you always stay profitable. And yeah, I'll catch you guys. Join my Discord. Have a bunch of free information in there. Yeah, we recently just sort of launched a student access, so I'm going to be posting a bunch of free sauce. And honestly, I don't even know if I'm going to be posting this. Yeah, but this might just be a Discord only video, low key. But if I do post it on YouTube, then I will. But anyway, I'll catch you guys. Because either way, it's free resources. It's going to be a free resources in the Discord. This is either going to be a free resources on the Discord or, either way, it's going to be free resources. Okay, anyway, talk too much. See you guys.